Let's take a trip back in time to the late 1970s. The United States was in a tough spot. We had something called stagflation, a nasty mix of slow economic growth, high unemployment, and soaring inflation. Prices were going up so fast that a dollar today was worth noticeably less tomorrow. There was a general feeling of malaise, a sense that America's best days were behind it. People were anxious, and the American dream felt like it was slipping away. Then, in 1981, a new president took office with a radically different vision. Ronald Reagan came in with a clear message. Government is not the solution to our problem. Government is the problem. Proposed a bold economic plan, which would soon be known as Reaganomics. The core idea was simple, yet revolutionary for its time. Cut taxes, reduce government spending, and deregulate the economy. The goal was to unleash the power of the free market, believing that this would spur investment, create jobs, and ultimately benefit everyone. This wasn't just a shift in policy, it was a fundamental shift in the nation's economic philosophy. The centerpiece of Reaganomics was the Economic Recovery Tax Act of 1981. This was one of the largest tax cuts in American history. The top marginal income tax rate was slashed from 70% all the way down to 28% over the course of his presidency. The idea, known as supply-side economics, was that if you let people and corporations keep more of their money, they would invest it. Businesses would expand, hire more workers, and innovate. Individuals would save, spend, and invest, fueling the economic engine from the ground up. This was a direct challenge to the previous decades of economic thought, which often favored government spending to stimulate demand. Reagan was betting on the supply side, on the producers and the entrepreneurs. At the same time, the Federal Reserve, under Chairman Paul Volcker, was waging a war on inflation. They raised interest rates to incredibly high levels, which was painful in the short term. It caused a deep recession in the early 80s, with unemployment hitting double digits, but the strategy worked. By the mid-80s, inflation was tamed. This stable price environment, combined with the tax cuts, set the stage for a massive economic boom. And boom, it did. The mid to late 1980s saw a period of sustained economic growth. The stock market soared. The term yuppie, young urban professional, our vocabulary, symbolizing a new generation focused on career, wealth, and conspicuous consumption. Suddenly, finance wasn't just for Wall Street bankers. It was becoming part of the mainstream conversation. This is where the cultural transformation really took hold. The deregulation of the financial industry was a key part of this. Rules that had been in place since the Great Depression were dismantled. Banks and savings and loans were given more freedom to invest in riskier assets. This opened the floodgates for new financial products. We saw the rise of junk bonds, leveraged buyouts, and a much more aggressive high-stakes investment culture. Wall Street became a place of legends and cautionary tales. Figures like Michael Milken, the junk bond king, became household names. The movie Wall Street and its iconic character Gordon Gekko, with his greed is good mantra, captured the spirit of the age. It was a time of high risk and high reward, and it fundamentally changed how America viewed money and success. For the average American, this new financial landscape brought both opportunities and new challenges. The shift away from traditional pensions, where a company guaranteed you an income for life, began to accelerate. In their place came defined contribution plans, most notably the 401k. This was a monumental change. Suddenly, the responsibility for retirement savings shifted from the employer to the employee. You were now in charge of your own financial destiny. You had to decide how much to save and where to invest it. This created a massive new market for financial services. Mutual funds exploded in popularity as an easy way for ordinary people to invest in the stock market. Financial advisors and cable TV shows dedicated to personal finance became commonplace. We all became amateur investors, checking our stock tickers and managing our portfolios. The language of the market bulls bears, PE ratios, became part of everyday conversation. This democratization of finance was a direct result of the policies and the cultural climate of the Reagan era. It empowered millions of people to build wealth in ways their parents could only have dreamed of. However, this transformation was not without its critics and its downsides. The gap between the rich and the poor widened significantly during the 1980s. While Wall Street boomed, many traditional manufacturing industries declined, leading to job losses in the Rust Belt. Critics argued that Reaganomics favored the wealthy and that the benefits didn't trickle down to everyone as promised. The deregulation of the savings and loan industry led to a massive crisis in the late 80s and early 90s, requiring a taxpayer-funded bailout that cost billions. The national debt also skyrocketed, partly due to the tax cuts and a massive increase in defense spending. So what is the ultimate legacy of Reagan's economic policies? It's complex, and it's something we still debate fiercely today. On one hand, Reaganomics is credited with ending stagflation, sparking a long period of economic growth, and fostering a culture of entrepreneurship and investment that still defines America. The focus on tax cuts, deregulation, and free markets remains a cornerstone of one side of our political debate. The idea that you are the master of your own financial fate, embodied by the 401k, is now deeply ingrained in the American psyche. On the other hand, the era also ushered in decades of rising income inequality, financial instability, and increasing national debt. The debates we have today about tax policy, the role of government, and the fairness of our economic system are all echoes of the revolution that began in the 1980s. Looking back, it's clear that the Reagan years were a pivotal turning point. They didn't just change tax codes and regulations. They changed how Americans think about money, risk, opportunity, and responsibility. Whether you see it as a golden age of prosperity or the beginning of a more unequal society, there's no denying that we are all, in one way or another, living in the financial world that Reagan helped build. The choices made 4 decades ago continue to shape our wallets, our retirements, and our dreams to this very day. Thank you for watching. If you found this look back at history interesting, please give this video a like and subscribe for more deep dives into the events that shaped our world. See you next time.